So hello everyone, welcome to CA Panel Audit Free Fast Track batch. In this batch, we are going to cover entire audit with 100% question answer using our magic book. So in this magic book, we have summarized entire audit with 100% question answer only in the 320 pages, right? And we have given a lot of meme technique, right, in this book. So if you want this book, you can get from the shivamnagpalclasses.com, right? So this is the part number B for the bank audit. Okay, there will be part number C also. This is part B for the bank audit chapter. So let's cover the remaining portion. Now, come to the point number 9. Verification of the assets. Okay. So bank have cash balances, money at call or the short notice. Right. Okay, not important for exam purpose. This topic only. This A topic. Let's read for that. Okay. Now, see here, cash. So how we will check the cash for the bank? Do its physical verification near the balance sheet date. Okay. And cash balance must agree with the balance of the cash register and the balance in the core banking system. Right. Normally nowadays nobody maintain the cash register. There will be core banking system, computerized core banking system of the bank. So the cash balance that we have verified physically should match with the balance in the CBS core banking system. Is it clear? Right. Now the second point says balance with the RBI. We have to maintain some balance with the RBI also. So for that we have to verify the ledger balances with respect to the confirmation certificates and reconciliation that is received from the RBI. So review the reconciliation with the special attention to these cash transactions which are unresponded, revenue item requiring the adjustment of the write-off, another credit debit entries in the RBI statement which are unresponded for more than 15 days. Okay. So not even for exam purpose, just read this topic, this A topic. Now, balance with the other banks. Many attempt a bank do the transaction with the other bank also. So for that, examine these points. No debit for the charges or no credit for the interest is outstanding. Maybe there is some amount given by this bank to another bank, maybe taken by this bank. So there is no amount for the charges or credit for the interest is outstanding. Means everything is settled. Right? Okay. Now, no check sent or received in the clearing. Okay, as we have seen in the last lecture of this bank audit, how the process work for the check clearing. So no check for the check sent or maybe received in clearing is outstanding. Means everything is settled. Nothing is pending here. All bills, checks sent and outstanding credit subsequently. Okay. Any bill sent, any check sent, and that is credit subsequently. So verify that whether it is properly adjusted or not. Any last transaction, in that case verify that no transaction for which window dressing is done. Means false transaction. Bank have not shown any false transaction. Now for the money and the money at the call or short notice. What do you mean by the money at call or short notice? Let's understand this. So at call, money is payable on the demand. Okay, these are the assets of the bank. Money at the call or the short notice. These are the assets of the bank, right? So money at call is repayable on the demand. You can assume the bank have given the loan to someone that is repayable on the demand. Whenever bank demand, that person have to refund that money, refund that loan taker. Whereas the short notice, money implies that the notice of repayment up to the 14 days. They have to return the money within the 14 days. So after cash, money at the call or the short notice are the bank most liquid assets. Right? Now. So for them, we have to examine, we have to verify the proper system of authorization and the compliance with the head office instruction. Any money given at the short or the call notice, right? So it is proper as per the authorization, person having the authority for that, and comply with the head office instruction, HO's instruction. Call loans with respect to the certification of borrower and call loans received. Okay, which borrower have taken this loan, verify the certificate, and also check the whether any loan paid by them, repaid by them, any loan received, any amount repaid by them whenever demanded by the bank. It can be short notice, it can be call notice, anyone. Now, balance in the registers tally with the control account in general ledger. This is a simple thing. Then subsequently repayment. Verify the balance at the year end, and the call loans cannot made net off with the loans received. If any payment received, verify the balance at the year end. This is simple. But the call loans means the call loans made cannot net off with the loans received. A person to whom we have given the call loan, but we have taken some amount from him as a deposit, as a loan also, that bank have taken. So we cannot have to net off them. We have to show them separately. Show them separately, right? Now, interest accrued and accounting on the year end. This is simple. So this is not important for exam purpose. Just read this. Just read this. Now, the next point. This is very, very important. Very, very important for your exam purpose. Question can be framed and the MCQ can also be framed over this topic. MCQ and the question, both can come. Right? Now, so special purpose certificate relating to the investment. So this topic says that we have to examine bank maintain as a auditor of the bank. We have to examine that the bank maintain the separate account, for the investment, for its own, for the portfolio management services, and for the other constituents, it's like brokers. Okay, so for all the parties, it's like for US, for themselves also, for the portfolio management services, for the clients, for the broker and third party, etc. So they have to maintain the separate accounts. They have to maintain the separate accounts for the investment. Now, the RBI guidelines says that separate audit of the investment under the PMS. We are talking about these by the external auditor. We are doing the audit for the bank. Whether we can do audit of these also, this investment made by the bank under the PMS? No. This should be audited by the other auditor, external auditor. You can say second auditor. Second auditor. We are doing the audit for the bank. There should be second auditor, other auditor. Okay, that auditor will do the audit of this investment under the PMS. There should be half-yearly reviews of the investment portfolio. 30th September and the 31st March. That investment made by the bank. Okay. So the auditor who is doing the audit for the bank will demand this certificate. Okay, he will not do this audit. This will be done by the external auditor. The auditor who is doing the audit for the bank, he will demand this certificate. This certificate. Demanded by bank auditor. He will not give that certificate. It will be given by the external auditor, second auditor. Right? Now see the question over this topic. There are two questions. Then we will start with the advances. See this. ABN Bank. ABN Bank engage in providing the portfolio management services to its clients, to its customers, and took prior approval from the RBI. Yes, they can provide the services that we can say PMS services. So your firm appointed as the statutory auditor of the bank for this financial year, right? And your senior instructed you to verify the transaction of the portfolio management services. whether you can verify the transaction? No, this should be verified, audited by the external auditor, not by a statutory auditor, right? So while verifying, you notice that the bank has not maintained the separate record for the PMS transaction for the bank's own investment as statutory auditor. What method adopted by you for the verification of the PMS transaction? Okay, so the bank have not maintained the separate record, for the PMS transaction. Also, your senior asking you to verify them. Okay, first of all, it will be verified by the external auditor, and the bank have to maintain the separate account for them also, right? So separation of the investment functions. Explain the B point complete. You have to copy paste this B point complete here in the answer, starting of the answer, right? Now, so in the given case, ABN Bank is required to prepare the separate record for the PMS, and as per RBI, PMS investment need to be audited separately by the external auditor, right? And auditor are required to give a certificate separately for same, and the statutory auditor will verify the same, will not do the audit of that transaction and that accounts. Okay, only ask the management to give that certificate. So in the above case, the auditor should not verify the PMS transaction, and bank advise the bank to segregate the PMS transaction from its own investment and provide a certificate of external auditor to that statutory auditor. If the bank does not provide the same, the auditor may report accordingly. Simple. This is very, very important question. I have marked important question. Study material question. Okay. Now, the next question says, your firm appointed as a central statutory auditor of the bank, and the bank recognize on accrual basis income from the dividend on the securities and the unit of the mutual funds held by it at the end of the financial year. Okay, so bank recognizing the income on the mutual funds, securities and units on the accrual basis, whether it is allowed or not, and the dividend on the securities and the units of mutual funds are declared after the end of financial year. That means we are recording them on the accrual basis. So it is allowed or not? Okay, let's see the answer. Again, important question. This is asked many times, MTP and the RTP. So income recognition for the investment, income from the dividend on the shares of the corporate. Okay, these are the provisions which explain its treatment, right? So income from the dividend on the shares of corporate bodies and the unit of the mutual funds. Shares of corporate bodies and the unit of the mutual funds should be booked on the cash basis only. In our case, these are the securities and the units of the mutual funds. They should be booked only cash basis, but in the question we are booking them accrual basis, and these are declared after the end of financial year. And any income from the government securities or bonds, debentures of the corporate bodies where the interest rates predetermined, means less risky, would be booked on accrual basis. It is allowed here in case of government securities where the risk is less, provided the interest is serviced and the regularly, and such is not in arrear. In that case, it is allowed. Means in that case, there is less risk, so then we will allow you. Okay. In the first case, in case of shares of corporate bodies and the unit of mutual funds, the bank may book the income from the dividend on the shares of corporate bodies accrual basis, right? This is allowed, provided the dividend on the share declared by the corporate body in its AGM and the owner right to receive the payment is established. The same thing is written in the AS9 also. Okay. In case of corporate bodies, it is allowed. In our given case, the bank recognizes the accrual income, dividend on the security and unit of the mutual fund. Okay, this is case of mutual fund. So for the mutual fund, always record the cash basis. For the corporate bodies, shares of corporate bodies, we can do the accrual basis also, but provided when the dividend of the shares are declared by the corporate body in the AGM and the right to receive the is received, established, in the same year. But in the given case, they are declaring the dividend after the end of financial year. So this will not apply here. We will go with the first point, that we have to record only cash basis, but we are recording only the as per the accrual basis. That is totally wrong. Accrual means we have earned the income, but still we have not received. So we have to record them when we have received. That means cash basis. So our conclusion here is that, so in the given case, the dividend declared after the end of financial year, hence the recognition of the income from dividend on securities and unit of mutual funds on the accrual basis is not in order. You have to go by the cash basis only. This is clear? Say yes. Okay. Now, again, this is very important topic. Why? Because we are studying about the bank audit now. So for the bank, advances is most important asset, right? And most important area for the audit also. Now, so there is a question which says the advances constitute the major part of assets of the bank. They are substantial number of the borrower to whom variety of the advances are granted by the bank. This is the bank main business now. So as an expert in the bank audit, we are the experts and discuss the area of focus and the audit procedures regarding the evaluation of the internal control. How we will evaluate the internal control over the advances. First point. Second, they're talking about the substantive audit procedures, the checking you will do. The third is recoverability of the advances. So we have to talk about these 3 points: internal control, substantive testing, and the recoverability of the advances for the advances, right? So number 1, internal control. Number 2, substantive audit procedure. Number 3, recoverability of advances. Now, see here. So for the evaluation of the internal control over the advances, its memory technique is examine the authority do credit appraisal and document with the VRDB. You can see this is a device in which we will document. So the authority, we have to check the internal control over the advances. So the authority do the credit appraisal and document with the VRTB. By authority means advances are sanctioned as per the delegated authority, means the person who is giving the loans, they have the authority. Some have up to 100 CR, 20 CR. So as per their authority, they are sanctioning the loans. Okay, check this internal control. Okay, authority. Then credit appraisal. The area of credit appraisal and procedure follow. So how they check the person capability, whether person are eligible for the loan or not. Check its procedure, how they are following this procedure, how they are verifying that the person is eligible or not, right? So now document. By document means all necessary document that is required for the giving the loan are executed before loan is disbursed. VRTB. By V means existence, enforcement and valuation of the securities. We are giving the loan against the securities, just like mortgage. So verify that you can assume a person is taking a loan by mortgaging a land. Okay, by mortgaging a land. So verify whether it exists in reality, right? And it can be enforceable and its valuation is proper. This is clear. By VR. Now R means operation in account, whether these accounts are operative or not, and review the system of review of advances. How the management did the review of advances given by it, how they check that. Okay, now VRTV. By T means compliance with the stipulated terms and the end use. Just like a loan is given for the purpose of study. Okay, so we have to verify that, bank have to verify that the person has used that loan for the study purpose only. Okay, maybe he using that loan for doing the party, investing in the share market. Okay, so the bank have to verify the its end use and its terms are complied by the person who have taken the loan. So check the internal control over that, whether the bank has that kind of system or not. We are TV. Now V is pending. Validity of the recorded amount, that is proper or not. So we have to check we have to examine the authority to the credit appraisal. Authority to the credit appraisal and document with the VRTV. Document with the VRTV. So use this and learn these points. Right? Now, the next point is about the substantive audit procedure. That means TOD, test of details, checking करना. So the master ID adversely identified NPA. We have to check whether the master ID adversely identified NPA and use AP, means analytical procedures, for the large interest. Use AP for the large interest. Whether the master ID adversely identified NPA and use AP for the large interest. AP means the analytical procedures. Carry out the analytical procedures. And large interest. By large interest means examine all the large advances. Okay, there are many advances given by the bank. Whether we will verify all of them? No, we will verify only the large advances given by the bank. Okay, also on the sample basis. Also on the sample basis. Large. Then interest. Interest means verify the completeness and the accuracy of the interest on those advances. So AP for the large interest. AP for the large interest. Now, master ID adversely identified NPA. Master. By master means verify the correctness of the master data. That is filled only one time. It is a data which is filled only one time. If this is wrong, then all the transaction will goes wrong. It's like interest date, their about information about their business, etc. So this is wrong, then all the transaction goes wrong. So check the correctness of the master data of loan updated in the CBS and parameters like installment, EMI, interest, tenure, etc. Then ID. Each customer tagged under the single customer ID for all of its accounts. You can say a customer have 2 account, 3 account, 4 account with the same bank. So all those accounts of same person are tagged under the single customer ID. So using that, the bank can identify that all these accounts are of a single person. All these accounts belong to a single person. Right? Now, ID is clear. Now, adversely. Examine those accounts which are adversely commented upon by the concurrent auditor, by the internal inspection team of the bank, or by the RBI inspection team. So there will be high risk. So we have to verify where the concurrent auditor report that, where the internal inspection team report that, where the RBI inspection team report that. These are adversely commented by them. In that case, we have to examine these accounts specially under the TOD. Okay. Now, identified. Examine the account identified, problem account, not yet slipped into the NPA. Okay. That means we are not receiving any repayment of principal, interest, right? So by obtaining the list of special mention account 1 and special mention account 2, borrower from the bank. Okay. We will read about this in later on this lecture also. In the next part. First of all, it become SMA. Then it become NPA, non-performing account. That means there is problem account not yet slipped into NPA. Okay, now problem started there. We are not receiving the payment, we are not receiving the interest. Soon it will become NPA. So verify them carefully. Means they are going to become NPA soon. Soon to be NPA. So verify this. Okay, what are the SMA? What are the SMA2? We will study about this in the next part, C part. Okay, don't worry for that. And NPA. Examine quick and early mortality accounts. That means such kind of advances which slip into NPA within the 12 month of sanction. Okay, we have sanctioned the loan in the January month. So till the end of this year, it become NPA. So verify them carefully. These are called morality account. These are called early morality account or the quick morality account, right? So verify them, which become NPA within the 12 month of the sanction. Within the 12 month of the sanction, right? Now, recoverability of the advances. The borrower security latest statement. Okay, to check the recoverability of advances, we have to check borrower security latest statement. Borrower security latest statement. Borrower. By borrower means the auditor report borrower having the credit facility beyond a cutoff limit. Okay, bank fix a limit for every persons, those who are taking the loan, that beyond this we will not give any loan. So we have to check whether the amount is given within the cutoff limit or not, right? Now, otherwise what will happen? He will not pay that. Okay, for this person, the limit is set off is 2 CR, but the loan is given 3 CR. So we have to check about recoverability of advances, whether he will pay or not, right? Now, so borrower security, report on the inspection of security, verify the same, latest statement of the borrower, financial statement of the borrower, and the statement, periodic statement submitted by the borrower. Okay, we have to verify for the recoverability of the advances. So this is a very important question. Okay, can be asked in exam. Remember, also mark it note. Now, so NPA provisioning. When an account become NPA, when the interest, principal are in arrear, or you can say unpaid, for more than 90 days. When the interest, principal are in arrear or the unpaid for the more than 90 days, in that case we will call it a NPA account. So for that we have to maintain the provisioning. Right? So as you have read in the C inter also, advance account also, you have to maintain some provision. That's like standard, substandard, loss asset, in this way, standard, substandard. We have to classify them and make the provision on them. We have to classify them standard, substandard, loss asset, doubt asset, secured, not secured, okay, and have to maintain a provision for them. But the rate of provision are not given in your syllabus for the CA final audit, right? So we have to first verify the system for that, classification and provision. Okay, so first of all we are reading their topics. Okay, under the NPA provisioning there are many topics are given. We will read them. Then after covering this topic, the question answer are given. Then you will understand how the question are asked from this topic. Okay, don't worry for that. So first of all we will read this topic, then we will cover the question over this topic. Okay, then you will understand how the question are asked in exam over this topic, this provisioning topics. So classification and the provision. We have to examine, we have to verify. There should be a system of ongoing identification. Okay, identifying them, standard, substandard, okay, and classification of the advances through the CBS without human intervention, means automated system. Verify them. And classification made by the branch is appropriate. Okay, accordingly same classification made by the branch also. Secured, unsecured portion segregated correctly and provision calculated properly. Review and compare the date of the NPA loan account and reason for any change. Okay. So the next point says any accounts regularized near the balance sheet date. What it means? See here, accounts regularized near the balance sheet date. Okay, you can say an account is payment is pending, interest is pending, principal is pending. in an account, interest is pending, principal is pending, principal payment is pending at the year end. So the person takes a new loan. He takes a new loan and use this amount to repay old loan. Use this amount to repay old loan. Maybe it's possible. Okay, maybe it's possible. Maybe bank are given knowingly for that because they have to show their accounts better. Because bank want to show the accounts better. Bank want to show accounts better. Or maybe the borrower want to show that he have paid the old loan and started new loan here. These are the account recognized near the balance sheet date. We have to check whether these are done by taking a new loan or not. Okay. If these are done by taking a new loan, then it is wrong. Okay. He can take a loan for other purpose also. For other purpose. That is okay. But when he is taking this loan for the repaying the old loan, maybe given by the bank knowingly or by himself he taking the loan for repaying the old loan, that is totally wrong. Okay, we have to verify that. He can take a loan, new loan for the other purpose, that is okay. Now see this. So any account that lies near the balance sheet date. So check the genuine payment source. Maybe he have made the payment from his own pocket. Okay, check that. And no need to classify the NPA. If paid by him from his own pocket, that is okay. If subsequently branch lend the fund to the borrower, okay, in that case we have to verify its genuineness, whether that amount is used by him for repaying the old loan or not. He can take for the other purpose, that is okay. But when he used for the repaying the old loan, that is totally wrong. Verify that. Then inherent weakness in the account. It become deemed NPA. So what do you mean by the inherent weakness? Classification of the NPA on the inherent weakness is a subjective classification. Right? Where the bank anticipate the borrower inability to repay the loan. Okay, bank thinking that this person will not repay the loan. Okay, so it's a subjective classification or the credit facility based on the borrower financial conditions or the external factors affecting the borrower. That means you are thinking that the bank are thinking that this borrower will not pay the loan. Okay, in that case we will call them the inherent weakness in the account and classify them as a NPA, deemed NPA. Now, classification as per the position as on the balance sheet date and review of the all standard accounts on the balance sheet date. So on which date we should do the classification? Check the classification on the balance sheet date. Any recognition on the basis of the past due, overdue concept, not on the balance sheet date. That means if any classification of the standard, substandard done by the bank on the past due or the overdue concept, means not on the balance sheet date. Also verify that. Whether any classification done by the bank on the basis of past due or the overdue concept, this is wrong. So verify that whether it is happen or not, such kind of things. Okay, we have to classify them on the balance sheet date. This one is correct now. This one is totally wrong. Verify this. This is clear? Now, so drawing power. Let's see, anything is given over a drawing power. Okay. Maybe we have seen this, the drawing power in the last class. There is a sanction limit and there is a drawing power. Okay, the drawing power is less than the sanction limit. The drawing power is based on the stock, debtor, etc. So ensure the DP is calculated as per the guidelines formulated by the board of director of the bank, right? And the special consideration to the proper reporting of sundry creditors and the stock under which the letter of credit and the guarantees are given. These are based on the your stock and the stock and the creditors na sundry creditors. It will be debtor, not creditor. Okay, maybe typing mistake. It will be debtor. As we have seen in the last class, these are based on your debtors now. See here. So drawing power can be calculated based on specific margin, other terms and condition in the sanction letter. The margin contribution to the business, 25% of stock and the book debts. Okay, debtor की बात हो रही है यहाँ पर. So there will be debtor, not the creditor. Sundry debtors and the stock under the letter of credit and the guarantee. Okay, it's debtor. Stock audit including the audit of books debts. Okay, talking about the debts here. Carried out by the bank for the all accounts. Having exposure more than a stipulated limit. Okay, bank fix a limit. It's like any loan given by them for more than 10 CR. So for them, we have to verify their stock and their books for the debt. Okay, so more than the stipulated limit that is fixed by the bank. In that case, we will verify their all the accounts. Calculated carefully the working capital advances to the company in the construction. WIP inventory valuation, because in these company, in the construction company, their calculation is quite difficult. Okay, so verify them carefully as the auditor. There is temporary deficiencies in the accounts. If there is temporary deficiency in the accounts, in that case, should not classify them NPA merely due to the deficiencies which are temporary in the nature. So what do you mean by the temporary deficiency? It means it means non-availability of the DP based on the latest available stock statement, balance outstanding exceeding the limit, temporary or non-reversal of the limit on due date. Just like we have to maintain the DP is 10 lakh, but it is crossed to the 12 lakh for only 1 month. Okay, that means these are temporary deficiency. For the 1 month only, we are close that limit. Not whole year, only 1 month. It's a temporary deficiency. Okay, it's allowed. Will not classify them NPA. If the DP limit is crossed for just a month, for the 15 days, 20 days, so will not classify them as NP. These are temporary deficiencies. And the stock statement relied upon by the bank for the DP drawing power should not be older than 3 months. Okay, so these limits, 3-month limit, etc., you can learn from our MCQ and the limit based summary. MCQ and the limit based summary. If you have purchased that hard copy, soft copy, then you can come for them. Okay, if you have not purchased, then you can purchase from our website shivamnagpal.com. Okay, you can get a soft copy or hard copy, whichever you like. Now, accounts DP based on the 3-month old stock statement considered as irregular. Okay, so it should not be older than 3 months. If more than 3 months, in that case, it should be considered as irregular account. Now, okay, we are covering them. We are reading these all the topics. After covering this topic, we will cover the question over this topic. Then connect this topic with the question. How the question will be asked in the exam, right? Now, limits not reviewed. Where the ad hoc limit. So, what do you mean by the ad hoc limit? Let's say this. Ad hoc limit means in the banking terms, a temporary increase in your credit limit. You can say extra limit, extra or the additional limit. Additional limit provided by bank to the borrower. Provided by bank to borrower. Right? So it's typically used for the one-off transaction, such as making a large purchase, paying for the vacation. Ad hoc limits are typically granted by the bank on case-by-case basis. Okay, any loan taken by a borrower, that is normal limit. But for some any additional transaction, they provide a additional limit you can take for that. Any one-off transaction or making a large purchase, paying one time, you can use that limit. So any ad hoc limit or the regular limit, normal wali, not reviewed. If not reviewed within the 180 days from the due date, in that case, it will be considered as a NP. Now, asset classification should be the borrower wise, not the facility wise. Okay. The asset classification should be the borrower wise, not as per the facility wise. But it means, as we have seen above, all the account of a person linked with a single customer ID. All the accounts, different loan taken by a single customer, different account are in the same bank or the same person. So all those banks are attached with a single customer ID, so that we can identify them that all these accounts are belong to a single person. Okay. So now the asset classification should be the borrower wise, not the facility wise. Just like a borrower have taken the 3 loans in having different 3 accounts. If one loan is and become NPA, but remaining are still continue, so in that case it will be also be considered as a NPA. So it should be borrower wise. So all loan become NPA given to that borrower. Okay, it should not be facility wise by counting this loan. It should be borrower wise. In that case, all those loans become the NPA given to that borrower. This is clear? Say yes. Okay, let's read this. So ensure that all the facilities granted by a bank to the borrower treated as a NPA and not particularly only single facility. If the debit arising to the development of letter of credit or invoking the guarantee are kept in the separate account. Okay, bank have given the guarantee for that borrower, so a debit coming for that in their account, it should not be counted. Should not be counted for the NPA purpose. This debit coming in their account because their guarantee is invoked should not be counted for the NPA. Should not be counted for NPA. The outstanding balance treated as the part of the borrower principal account for the prudential norm purpose. Okay, any balance in their account, it is deposited by them, should be counted for the prudential norm. That's like counting the standard, substandard. Okay, for that it should be counted. But any guarantee invoked, in that case it should not be counted for the purpose of classifying them NPA. Now let's see this. Okay, so when the government guarantee the advances, if it become NPA, the loans are granted by the maybe the CG or the HG, by the CG or the HG, any case, right? So it should be, its income should be recognized on the realization basis, means the cash basis, not on due basis. Okay, whether the guarantee given by the CG, whether the guarantee given by the SG, in all the cases, this interest income should be recognized only on the cash basis when it is actually received by the bank. This is clear? And its classification. Here we talk about its income on the interest, etc. But now we're talking about its classification. So if it is granted by the CG, in that case treat the NPA if the guarantee given by the CG invoked. Okay, but in case of the SG guarantee, no such exception. NPA if overdue for more than the 90 days, means there is no benefit. See here, guarantee given by the CG SG, its income should be recognized only on the cash basis. Any case, both the cases, whether the guarantee given by the CG whether the guarantee given by the SG. In both the case, means the guarantee does not matter for the income purpose, but for the classification purpose. If guarantee given by the CG is not invoked, then should not classify. If it is invoked, then classify as NPA. Otherwise, no NPA. If guarantee given by the CG, classify not NPA until unless it become invoked by the CG. This is clear. But when the guarantee is given by the SG, again, it have no value. It will be classified as NPA if overdue for more than the 90 days. That we treat normally nice. Treat normally means the guarantee given by the SG have no matter here. Okay. Note, if CG guarantee is not invoked for a long period, in that case it should be reported in the LFAR, long form audit report. Long form audit report, right? Okay. Now, in case of agriculture advances, we have to ensure that the NPA norm applied crop season determined by the state level bankers committee in the each state. So how we will classify them in case of agriculture advances? So depending upon the duration of the crops, if these are short duration, then overdue for more than the 2 crop seasons, and these are the long term duration. In that case, overdue for the 1 crop season. Okay, these are the short term crops and the long term crops. In case of long term crops, overdue for more than the 1 season. In case of short term crops, overdue for more than the 2 crop seasons. Then classify as NPA. This is agriculture advances and applicable to all the direct agriculture advances listed in the master circular in respect of agriculture loan, and remaining loans for the other than this which are not covered in the master circular, in that case the rules of 90 days are relevant. Normal one that we applied, right? Okay. Now, restructuring of the advances. Restructuring in the an act. Okay, its meaning is defined here. It is an act in which a lender, for economic or the legal reasons, grant the concession to the borrower. Maybe the borrower is not paying the principal money. Maybe the borrower is not paying the interest money. So we are restructuring the advances. Okay. So it involves the modification of the terms of advances, just like changing the installment amount, changing the interest amount. Okay. Its repayment period, its interest rate, section of addition credit limit, right? As we have do the question also in the advance account, see inter, etc. Restructuring of the advances. Now, so verify the compliance with the requirement of circular issued by the RBI regarding this. The bank may restructure accounts classified as standard, substandard, doubtful, note with the retrospective effect. Okay, the bank can structure that account, but it should not be classified standard, substandard from the back date. Means it should be classified from the upcoming dates prospectively. On restructuring, account will be downgraded from the standard to the substandard, and NPA will remain NPA. Okay, if any account is restructured, then if it was standard, it becomes the substandard after the restructuring. If earlier, before the restructuring, it was NPA, then after restructuring, it should also remain the NPA. Okay, it should not become the active account. It should also remain the NPA after restructuring also. This line is very important. Now, upgradation of the account, NPA to the standard, NPA to the standard, whether this is allowed or not. So upgrading the strictly as per the RBI guidelines, and possibility of incorrect upgradation of the account partially. Maybe some part they have made active and some are not. Okay, So possibility of incorrect application of account partial recovery made, and overdue portion might not be wiped off completely. But they are saying that first of all we have to comply with the RBI guidelines, right? And there may be possibility of incorrect application of account where the partial recovery are made and overdue portion might not be wiped off completely. Yes, they are saying that maybe bank have made the wrong application. That's like some money is recovered from that borrower, but not all the money are recovered, right? So in that case, should not be upgraded. It should not be upgraded. We have to check that. And possibility of recovery after the cutoff date and being upgraded after the balance sheet date. So if it is possible that after the balance sheet date, that person will repay some principal money, interest money. So it will be considered for the next financial year, not for that financial year. Okay. Consider it for the next financial year. So we have to check whether the bank have taken for the same financial year for the next financial year. Okay. Now, this is important topic. Study material question. Okay. Sale and purchase of the NPA. So in the audit of the Skip Bank Limited, you found the bank sold the certain of its non-performing assets and draft the points, the audit check for this area. Bank have sold some of their NPAs. So what are the rules, what are the provisions for the purchase and the sale of the NPAs? So A are the general point and B are the point for the sales and the C are point for the purchase. Means you can say general point means common points. A are the common points, B are the for the sale and C are for the purchases. So how to learn this? See this. BOD RD sell to NPA without recourse. BOD RD sell to NPA without recourse by BOD. Okay, these are the common points for the sale and purchases, right? Now, so policy of the BOD for the procedures and the delegation of the power and the valuation. Check that these exist or not for the sale purchase of the NPA. Only then RD. It is here. The bank does not purchase the NPA which are sold already. First of all, bank sold a NPA, then it cannot purchase that NPA back. Okay. Now, so BOD RD sale. By sale means subsequent to the sale, the bank does not assume any risk over that. And 2, only such NPA can be sold which are remaining in the bank for the bank books for the 2 years. Let's say this year any loan become NPA. Whether we can sell that? No. So this NPA should remain in the bank books. I repeat, this NPA should remain in the bank book at least for the 2 years. After that 2 years, the bank can solve this, right? Okay. Now NPA. NPA should be sold at cash basis only. Sold in the cash basis only. Without recourse. The sale purchase without recourse only. There is a 2 terms used, that is recourse or the without recourse. So meaning of recourse is that if bank sold this NPA to a third party and the third party is not able to recover this amount from that borrower, third party is not able to recover the amount from the borrower, in that case the bank have to pay to the person to whom it sold. Okay. If another recourse arrangement, the bank have sold the NPA to a third party have to recover the amount from the borrower, but if the borrower is not paying that money to the third party, in that case the bank have to pay to the third party. But another without recourse is responsibility of a third party. If the borrower is not giving any amount, we have not any responsibility. These are without recourse. So the sale of NPA, purchase of NPA should be without recourse. The bank have no responsibility of recovery from the borrower, right? Now, point for the sale and the point for the purchases. Remove from the books after the sale. So whenever the bank sell the NPA, remove from the books. So any shortfall on sale of the NPA charged to the profit and loss account. Sale below the net book value. Book value having the 2 lakh rupees but sold for the 1.5 lakh. The 0.5 lakh means 50k should be charged to the profit and loss account. But when sale for the more than net book value having the 2 lakh but sold for the 3 lakh, 1 lakh profit. So exceed is retained to meet the sale loss on the sale of the other NPA, does not utilize as a profit. Okay, if the book value is 2 lakh but sold for 1.5 lakh, in that case charge 50k to the profit and loss account. The loss should be charged to the profit and loss account. But when there is a gain, it should not be credited to the profit and loss account. It should be used for meeting the further loss in the future for the NPA. Okay, first of all, set off with this. If any amount remains still, then debit to the profit and loss account. Then debit to the profit and loss account. So maintain this separately, this provision, by making provision for meeting the loss in future on selling this NPA, right? Okay. So point for the purchase of NPA, the provision as per the classification status in the books of purchaser. Okay, in the books of purchaser it was 7%, you can say, just taking example, provision. So we have to say take the same classification that is done by the provision as per the classification status in the books of purchaser. Okay, whether it's a standard, substandard, so whatever the status in your books of account, we have to classify them accordingly, right? Any recovery first adjust against the acquisition cost and access as a profit. Let's say we have purchased some NPA. Any recovery in form of interest or the principal we have received over them, any interest, any principal we have received over them. So first of all, use that interest and principal adjust with the acquisition cost, purchase cost of those NPA, right? And access as a profit. Access as a profit over that purchase cost. And the capital adequacy is the 100% risk weighted to the NPA purchase from the other bank. Okay. This will be read in the next lecture. What do you mean by the capital adequacy? It is covered in the next lecture. Okay. Now there are many questions are given. Let's cover these questions. See here. So Messrs. Adi and Company, Chartered Accountants, allotted the branch audit of a bank for this year. We have to verify these points. Number 1 point says fulfillment of the criteria prescribed for the NPA norms for the government granted advances. In case of advances which are granted by, so for answering these topics, for this point we have to refer the above NPA provisions. Give the relevant answer for this. Okay. For the first point we have to write the government agriculture advances. Okay. Its income should be recognized only on the cash basis, either granted by the CG or the LG, doesn't matter. If granted by the CG, should not classify them as a NPA unless grant is revoked. But in the case of the SG, grantee given by the SG doesn't matter. Okay, more than 90 days classify as NPA. Same those provision explain there. These one. Now, fulfillment of the criteria prescribed for the NPA norms for the advances given for the agriculture purpose. Okay, but they are saying here fulfillment of the criteria for the NPA norms for advances given for the agriculture purpose. Whereas it can be for the 1 crop season, for the 2 crop seasons. Okay, so explain them. This one. Same. Then third point, the drawing power calculation for the stock statement for the working capital account. Then This one, drawing power. Explain this as this. This is the answer for the third point. For the fourth point, accounts where the regular ad hoc limit are not reviewed within this time. In that case, what we will do? Then classify them NPA. Simple. This is the answer. Fourth answer. Okay. So refer the above answer. Maybe asked separately. This question may be as a combined format. Now the next question. In the audit of Good Samaritan Bank, you observe that in a particular account there was no recovery in the past 18 months and the bank not applied the NPA norms. Okay, there is no recovery from the past 18 months and the bank applied the NPA norms and the income norms in this account. The bank management replied that this account was granted by the CG. Granted by the CG. Okay, bank have not applied the NPA norms, means not classify them as NPA. And these are granted by the CG. Hence, these norms were not applicable. The bank is saying that. And bank has not invoked the guarantee. So, would your answer be different if these guarantee are given by the HG? Yes. Okay. In the second part, they are saying that bank advances portfolio comprise of the significant loan against the life insurance policy. Write the suitable audit program for verify these advances. The advances are given against the life insurance policy document. So how we will verify that? Okay. These are the spread question. Maybe come spread in the exam also. So answer for the first part. When loans are granted by the CG, HG both cases. For the guarantee by the explain about the income recognition and CG, same point. Okay, it should be classified, income should be recognized when actually received. In case of CG, HG treatment, as we have explained above, copy paste the same. Since the bank has not invoked the guarantee, the question of repudiation does not arise. Hence, the bank is the correct to extent of the not applying the NPA norms. Yes, the classification is correct. We are not required to the NPA. But the income should be recognized when actually received. But this exemption is not available for the income purpose. Either these are granted by the CG or the HG in the both the cases. In the both the cases, it should be recognized only on the cash basis. Hence, the income to the extent not recovered should be reversed. Okay. So would your answer be different if these guarantees are given by the HG? Yes. Explain about the HG, NPA more than 90 days, no exception, normal case. Yes. If guarantee given by the CG is not revoked for the long period, then report in the LFA. Okay, simple. Now, in the second part, in the second question, they are saying that we have given the loan against the life insurance policy. So, how to verify that? Verify the surrender policy premium deducted. This is surrender, but for the memory technique, we will call it surrender. Surrender policy premium is deducted. Surrender policy premium is deducted. By surrender means surrender. You can say surrender. So examine the certificate regarding the surrender value obtained from the insurer. Okay. So if this policy we will surrender to the insurance company, so how much money we will get from that? Verify that. Now policy. Inspect the policies and see whether they are assigned to the bank and such assignment registered with the issuer, means its ownership transfer to the bank name. Transfer to bank name. Premium. Whether the premium is paid on the policies and they are in enforce. Whether that person who having the insurance policy are paying that premium regularly and this policy is active, okay, in force and deducted. See if such surrender value is subject to payment of certain premium, the amount of such premium deducted from surrender value. Okay, many times this happen when we surrender a policy, we will get less amount. Okay, some amount are deducted by them. So check how much amount we are getting after lessing this premium from that. Okay, so check the surrender policy premium deducted. For that, loan given against the insurance policy documents, right? Okay, this is very important question, also marked important, can be asked as a separate question, can be asked as a separate question. Now, your firm, next question, your firm appointed as a SCA of a bank, statutory auditor. Bank is a consortium member of cash credit facility of the 50 CR to X Limited. The bank on the shares is 20 CR only. So how the consortium work? Under this there are many bank, a lead bank, these are other bank. They are giving loan to a borrower together. They are a lead bank, that means head bank, leading all the banks, and many banks are connected in this advances and borrowing, right? So just like this bank have received that amount, received the principal and the interest, but this bank have not received. This one received, this one not received. So whether we will classify them as NP or not. Okay, so we have to check the bank wise. Okay, check the bank wise whether their part is received or not, their interest and their principal part is received or not. Okay, it is not like that the lead bank have received this part, so we will not classify them as NPA. Okay, so each bank have to check their own whether the interest or the principal are received by them or not. For their own classification, they have to verify their own realization from that loan given by them as a part of that consortium. So our bank having the share of 10 CR only. During the last 2 quarters, against a debt of 1.5 CR toward the interest credit in the X Limited account, our amount of only 1.25 CR only, means remaining amount is not received. So based on certification of the lead bank, the bank is classified as a performing. The lead bank, they have received the full amount, but our bank have not received the full amount. The lead bank is classifying them as a performing, but we have not received the full amount, so we have to classify them as a NPA. It should be bank wise, their own realization basis, right? So first of all, copy paste the question here. Then sometimes the several banks form a group, consortium, under the leadership of the lead bank to make the advances to large customer on some condition and the security with the proportionate right. So together they give the loan to a customer, to a borrower. There is a lead bank also. So in such cases, each bank may classifies the advances given to by it as per its own experience of recovery. Very important line. As per its own experience of recovery and other factors. Since in the last 2 quarters, the amount remains outstanding, but thus interest amount should be reversed. So we have to reverse them. This is despite the certificate of lead bank. They are classified them as a performing. Ignore that. Accordingly, this should be classified as a NP in our account, and we have to reverse that interest. Should not recognize the income. Should not recognize the income. Okay, in the next question. Let's see this. ABC Bank sanctioned the credit limit of the 100 lakhs to Messrs. Volcart Limited on the 1st September 2021. The renewal of the limit was due on the 1st September 2022. Okay. While doing the statutory audit of the branch for this year, you find that the renewal has not done even after the 180 days over. The bank says that the renewal process initiated on time and most of the documents are received. The account is operated regularly as is in order. The balance is maintained with the DP, but also shows a letter from the Volcart stating due to the sudden death of their auditor, the new auditor was appointed. The procedure for the appointment took some time now, and new auditor doing all the work again. The limit was not renewed till the end of the year. Okay, so there is a genuine reason. This is a temporary deficiency. This is a temporary deficiency. This is allowed. However, the statements are renewed on the 10th of April and the renewal letter was issued immediately. So, as per the guidelines given by the RBI, account should be classified as NPA if renewal is not done within the 180 days. Lekin in the some cases, in the given cases, the operation in account are excellent. Okay. The bank has shown the letter from that, the company, there's some genuine reason now for dealing that. Okay. So even the section limit was after the balance sheet date. Therefore, it is a adjusting event as per the AS4 that exists at the balance sheet date. So also matter of substance over form means a genuine reason. So the auditor should not classify them as a NPA. It should be standard asset. Right? Now, come to next point. Messrs S Limited is a MSME unit. The company does multiple banking company. Sorry, the company does multiple banking. The company is availing the CC limit from the U Bank of 25 CR limit availed. Remained less than 5 CR during there is a full stop. Let me read again. Okay. So Messrs S Limited is a MSME unit. It is a MSME. Okay. The company does multiple banking. The company is availing the CC limit from U Bank of 25 CR limit. And limit availed is remained the less than 5 CR during all the days of the financial year. Okay. The bank CC limit is that we have taken is 25 CR. But it will remain less than 5 CR during all the month of the year. The company not done any credit in the cash credit account during that year as its operating account, current account in newly opened other bank. Okay, we have a CC facility from this bank. We have a CC facility from this bank. But our bank account for deposit purpose having in different bank. So company having sufficient security of the stocks, debtors, DP of 25 CR remain all over the year. The company is availing the term loan from other bank branches. Now the bank manager is insisting to route the sale proceed to the bank. Now they're saying that you have to receive this amount from their bank only. This bank saying. Otherwise, the CC limit and a term loan with other bank will also be counted as a NPA. They are saying that we will count it as a NPA. So NPA classification in the consortium advances. See here, advances classified as NPA only if that ceases to generate the income for the bank. So when we will classify NPA, when it ceases to generate the income for the bank, interest, installment of the principal of the advance remain overdue or the out of order. In two cases, when it ceases to generate the income for the bank, when the interest, installment of the principal of the advances remain overdue or the out of order. So what do you mean by the overdue? What do you mean by the out of order? The amount is said to be overdue when it is not paid on the due date. the account is said to be out of order when the outstanding balance remain continuously in excess of the sanction limit. It's like the limit is 10 lakh, but it's costing the 10 lakh, 12 lakh. Okay. If there is no credit continuously for the 90 days as on balance sheet day, right? Because in the given case, we are receiving the amount in other bank, not on this bank. So there is no credit. There is no credit. This condition is meeting here, right? And the credit is not enough to cover the interest. There is no credit. There is no credit because we are receiving the amount in different account now, right? So in the consortium, each bank classifies the advance given by it as per its own experience of recovery. So test the question, and our conclusion is that the CC facility with the U bank need to be classified as NPA as there is no credit to serve the interest charged in this account, and the classification of term loan with other bank deposit or payment of that bank. Okay, for this bank it depends upon the payment made, but for the U bank it should be NPA because there is no credit. We are receiving all the amount in this account. There is no credit to meet the interest part, so it will be classified by the U bank as a NPA. This is clear? Okay. Let's cover all the question in this lecture itself. Boat Limited is enjoying the cash credit facility sanctioned from the Nariman Point, Mumbai branch. There is a Mumbai branch of that bank, Nariman Point, Mumbai branch. So Boat Limited is enjoying the CC facility from this branch of that bank of KNB Bank for the 250 CR. This is clear. However, for the practical consideration, various sub-limit fixed for the borrower company for operation at the Solapur, Pune, Nasik branches of the same bank. Okay, the CC limit is 250 CR in total. We have taken this CC limit from the Nariman Point branch, but we can withdraw this money from other branches also, just like from the Pune, Solapur and Nasik. This is the main branch. This is other branch. This is not the case of consortium. These are branches of the same bank. Okay, the bank is same here. This is not the consortium, right? The manager of the Solapur branch notice that there is no credit transaction in sub-limit account operated at the Solapur for more than 90 days. There is no credit. Okay, doesn't matter. We have taken the CC limit from the Nari Point branch. Okay, we are just taking some amount from there because the bank is same here, right? We have to check for the Nari Point branch, not for that Solapur, Pune, Nasik. Check for the Nari Point branch where we have taken the CC limit, actual branch for us. So discuss the approach of the CA, Munni Badram, branch auditor of the Nariman Point branch in the matter of asset classification of the above borrower account, right? This is RTP May 23 question. See here. So asset classification, sometime the customer sanctioned the CC limit at one branch, but the authorized to apply the same limit over the many branches of the same bank. This is not the consortium. So in such case, the status of the accounts as a NPA determined at the limit sanctioning branch with reference to the overall sanctioning limit. Okay, so we have to check for the Nariman Point branch, not for the Solapur branch. Note by the each other branch. Okay, check for the only Nariman branch, Nariman Point branch, right? And the auditor of limit sanctioning branch should examine the whether it received the particular of the all the transaction of account at sub-limit branches. Okay, so while verifying this transaction of that the Nariman Point branch, the auditor should verify that all transactions at these branches should be received by him for verifying the same. Standalone matter of the no credit transaction for the more than 90 days at the Solapur branch is irrelevant. We have to check for the Nariman Point branch only. So the conclusion is that the Solapur branch has to follow their classification made by the limit sanction branch. Okay. So for that Solapur, its NPA or note depend upon the whether the Nari Point branch, how this branch treating it. If NP, then NP for them also. If performing also, then performing for them also. This is clear. Now, in next question, see this. In course of the statutory branch audit of the KS Bank Limited, you observe some borrower account are regularized before the balance sheet date by payment of overdue amount. Narrate the audit procedures to carry out on the classification of the advances. Okay, this same like now. Any amount taken by the borrower should not be for the repaying the old loan. That should be from a genuine source. Okay. The audit procedure for the classification of advances and provisioning. Classification and provisioning. 9th point D. One second. Okay, the audit procedures for the classification of advances and provisioning. Classification and provision explain the 9th point D. And the account recognized near balance sheet date. 9th point D means referring the above points only. Their classification treatment, this one. This one, classification and near balance sheet date. Means explain these two. It's a 9th point D. 9th ka D. Explain these two. Clear na? Okay. Now, CA Harshit is conducting the audit of the branch of the bank. On examining the 20 large advances, he finds that the 5 examined cases loan application filled up scantily, means incomplete, with important details are left out. So it is also noticed that the CC limit to the borrower were enhanced during the year, but there are no record for the assessment of enhanced working capital requirement. The branch is unable to show such assessment and working in the system. However, all the 5 accounts are operating satisfactory. So these classification standard asset. Would the above information prompt to the auditor suggest change the asset classification? Okay, the branch is unable to show such assessment working in their system. However, all the 5 accounts are operating satisfactorily. These are classified as standard. If operating properly, that's okay na. If any information is not filled, doesn't matter much na. Okay, if working properly, should not be classified as NPA. So an account become NPA when it ceases to generate the income for the bank. In the given case, all the 5 accounts are operating properly. There is no reason for getting changed them, right? The matter of scantily filling up the loan application and lack of the record for assessment of enhanced working capital requirement shows that the internal control over the advances are not proper. Control are weak here. It shows that deficiency in the credit appraisal at the branch level, right? So this should be highlighted in the LFAR, long form audit report, right? Should not become the NPA. Now see it. Gupta and Company appointed as the statutory auditor of the TCB Bank Limited, a private bank. Mr. Kaviwal Gupta, engagement partner. While doing the audit, notice this point. The first point says that interest on the SG granted advances taken to the income, even such advances remain overdue for the 90 days. Even it is granted by the CG or the LG. In both the cases, the income should be recognized only on the cash basis. Reason for the query and action to be taken. Okay, these are the queries raised by them here. So, is SG granted advances, treat them as NPA, even remain overdue for the 90 days. Okay, no benefit here. But for the income recognition, should be on the when they have realized that cash basis. So interest income recognized on such advances would be reversed and taken to income only when it actually received by the bank. This is clear. In second point, there is an account for which ad hoc limit, extra limit, additional limit has not reviewed for the 180 days from date of such sanction. Accounts for which ad hoc limit has not reviewed for the 180 days from date of sanction should be considered as NPA. Its treatment in the books would be charged from the performing asset to the change from PA to the NPA from the date when such change in the treatment was required. Simple analysis, NPA कर देंगे. So one of the NPA was sold for the value higher than the net book value. Higher than the net book value. So keep that amount for the future purpose when there is a loss, right? So the profit was not recognized, but excess provision is reversed. For NPA, when there is sale for a higher than the NP, net book value, the auditor required to ensure that no profit is recognized, okay, should not be credited to the profit and loss account, should be keeping separate provision. The excess provision has not to be reversed, but to be retained to meet the shortfall loss in the future that may arise because of sale of that NPA, other NPAs. So here the action should be that the entry for the reversal of excess provision would be cancelled in the books of account. Such excess provision retained to meet the shortfall and loss on the sale of the NPA in upcoming future time, right? Okay. Now, in one account, an additional temporary limit sanctioned for 25% of existing limit and for a 120 days tenure. That additional temporary limit should not be more than 20% existing one and 90 days max. This is a provision. The limit should not be more than 20% of existing limit or maximum for the 90 days. The term for additional temporary limit for such account should be revised to 20% of existing limit and for the 90 days next tenure. But in the given case, it's 25%. This is wrong. On verification of the accounts outstanding forward exchange contracts, the net position for one foreign currencies was not squared and uncovered by the substantial amount. The net position for each foreign currencies should be generally squared, means काटने की बात कर रहे हैं यहाँ पर, and should not be uncovered by the substantial amount. The net position of the branch for each foreign currency should be square off. They have to square off the same, cut the same, and get covered by a substantial amount. Okay. Almost the same point are explained here and same are here, but this is the format of answering this question. This is asking the RTP. So if this question come in exam, you have to answer in this format. Okay, remember this format. Now the last question for today. CA Prachi conducting the branch audit of a nationalized bank. While reviewing the documents, paper of the borrower, enjoying the audit facility of 50 CR, the customer of the bank is enjoying the audit facility of the 50 CR against the stocks and the book debts. So these points you observe. The balance in the OD was this much, and the balance in the account exceed the sanction limit during whole the month of March only 1 month. This is temporary limit allowed, no problem. As per sanction letter, the stock book that statement required to submitted monthly. The latest available stock that for the Feb 23 shows the DP of 48 CR only. This much. And however, the stock and book debt statement of previous months shows the adequate DP. So down by only for the 1 month. So stock audit of the borrower also conducted during the year. The stock audit report also submitted and it shows the adequate DP in the account, but it is commented adversely on the declining turnover as compared to last year. Okay, that is okay. The turnover can get reduced. Renewal of overdraft facility was due on the 20th October. Okay, this is just extra point for making you fool. The question is based on this point, right? So there is a renewal of the overdraft facility was due on the 20th of the October. The account was short renewed by the competent authority for a period of 3 months. However, the borrower not submitted the complete renewal paper till the 31st of 3 of 2023. There is a request for the letter from the borrower on record stating the valuation report of the property located for a faraway location was taking time. The branch classified account as a standard. How you will do the same? Okay. So the OD facility should be reviewed by the authority for the 3 months. Its renewal is the 20th of October, but in the reality, the borrower had not submitted the complete renewal paper till the last of this year, 30th of 3. This is allowed or not. So the classification of the advances with the temporary deficiency and limit not renewed. The borrower enjoy कर रहा है 50 CR की limit against the security of the stock and the debt, right? Now the latest stock availability for 23 Feb is adequate. There was an adequate DP throughout the year. Stock report also reflects the adequate DP. So further comment on declining the sale is a general informative point for the management purpose for making the correct decision. The fact of overdrawing in the account during the month March is a temporary deficiency. This is allowed. Okay, these points are allowed, no problem in that. But this is the problem here. They are saying that here the RBI instruction आमतौर पर जो क्रेडिट लिमिट होती है आर रिव्यूड विद इन द 3 months फ्रॉम द ड्यू डेट एज पर आरबीआई एज पर द बैंक ऑडिट गाइडेंस नोट. ओके, एज पर आरबीआई द लिमिट इज 3 months, but as per the bank guidance note, in case of the constraints such as non availability of the financial statement data, the bank should furnish the evidence that renewal and review of the credit limit is underway. वर्क चल रहा है and completed soon. In any case, the delay of 6 months is not considered desirable. Means they are giving the 6 month time. The guidance note giving the 6 month time. RBI giving the 3 month time. This will prevail. We have 6 month time. So October, November, December, January, February, March. October, November, December, January, February, March. So you will get 6 months here. So October nahi, next month will be counted November, December, January, February, March, April. Till April it's allowed. Till 20 April it's allowed. Right? So hence an account where the credit limit has not reviewed within this time from the due date will be treated as the NPA. It is, we have to note that the counting of 180 days done from the date of original due date, from the renewal date, not from the expiry date. So in the given case, the original date of renewal was 20 of the October now. The period of 180 days still not expire on the balance sheet date. That means 6 months. So based on upon the CA practice should accept the classification as a standard asset because the date will expire on the 20 of the April. On the balance sheet date, it's not completed. It should be covered in the next financial year. So should be classified as a standard asset in the bank of, right? Okay. So goodbye. In the next part, we'll cover the remaining questions of this chapter. Okay, so goodbye.